Hello and welcome. You're watching Closing Trades on 80 now. Fairly quiet at the index level. We are just around that 24,850 mark. Very range bound is what we have been for most part of the trading session. Bank Nifty was in the red for most part today, but has just managed to break into the green just around the flat line as we speak. As far as the Bank Nifty is concerned, broader markets are faring, I think, a bit worse because there was a bit of a pressure earlier when I checked the mid-cap and the small-cap indices, and that continues to be the case. Not by a whole lot, but definitely the broader markets are underperforming right now as we speak. What's doing well is autos. So after a couple of days of a retracement, today Bajaj Auto has come back with a bang. So a 5% move almost on Bajaj Auto as we speak. Tata Motors is doing quite okay for itself. That's sitting with a gain of around 1.5%. And other names like Coal India, Sun Pharma, Hero MotoCorp are your other gainers. On the losing side, IT clearly is on the back foot. So Wipro is down, LTI Mindtree is down, TCS, Infosys, they're all down and out. So IT as a pack itself is seeing quite a bit of weakness. And Nestle too is under pressure. From the broader markets, no major sectors or segments that you can pinpoint, but you do have a Nykaa which has had a very stellar week. In fact, a 9% move today itself. If you look at the week-to-date chart, that would result in an up move of over 20% for that counter. So very good week is what we have seen for that. Railtel, Fortis, Interglobe Aviation, these are some of the other stocks which have had a good week, Aisha. And finally, just last 1 hour of the trading session for the week.
Oh yeah, that is right. But yes, like you were flagging off Nykaa and that block deal that happened, almost 1.5% equity that changed hands earlier today. So that's one stock which is in focus, holding at a jump up of about almost 9% in trade. There's TVS Motors as well. Same time yesterday we were chatting with the management as well. We will play a soundbite of what they had to tell us in terms of what their plans are when it comes to both CNG as well as EV and what the way forward for the company is. But UBS has upgraded the stock now. They maintain their buy rating and they've upped the target price to now 3,200 from the earlier 3,000. There's also Railtel, a fresh order win of about almost 53 odd crore rupees from the UP Police Board, and that's definitely keeping the stock warm. 17 million shares traded and a 5.5% uptick on that stock, no less. Interglobe Aviation, that's got to be the star performer both yesterday as well as today. This has been one of the top volume buzzers. Another 5% of a move coming in on Interglobe today, and yesterday as well it held out by I think 3 to 4 odd percent or so. There's TVS Motors too, by the way. 3.5% in trade yesterday, and today also the stock has jumped up 3%. But before we move forward and hear out what the TVS management had to tell us, let me take it across to Kunal as well as Naresh and find out what is it that they're making of the trading session so far. And Kunal, very listless, at least at an index level.
I think you're short of adjectives. You should add too much of very listless for the index. Just 20-point range for the Nifty, and I think that's not even just 1.1% of the index trend, and 40-50 point range for the Bank Nifty for the last 3 hours or 4 hours. And I think that's that tells you that the markets are in no mood of any kind of a trend in terms of the indices. But the action is more towards the mid cap. So today the only difference which you're seeing on the market front is that the action is more towards the mid caps and tier 2 mid cap names and small cap stocks, where you're seeing volume price action getting at play. The banking stocks, the PSU banking stocks, they've gone through a pause. Many of the larger cap names have gone through a pause for themselves. So I believe that maybe we are in that phase of the markets where we could probably grind in terms of the index movement, but the action could remain more stock specific, especially on the mid cap front.
Yeah, absolutely. Very listless, as Kunal has been pointing out. So maybe it's just telling the traders that it's Friday, wrap up your day early and go home. There's not much action right now, at least in the markets. But Naresh, have you managed to find some trading ideas, or you two have just shut shop and called it a day already?
So the markets are waiting for the global event wherein tonight there should be some say a tick in the US markets, and that should lead to some gap up or gap down on Monday, and that's the reason we are seeing a very listless move. But the fact is there is no nervousness. We've not seen a 100-pointed downtick getting nervous like what happened in US markets yesterday. So the structure is still positive. The only place we are seeing a little bit of a momentum coming in is in the FMCG side. You have HUL hitting a new 52-week high, so that's an interesting space.
So that's the word coming in on some of these names that one should be watching out for. Kunal, Bajaj Auto and TVS Motors seeing good traction. Would you be perhaps buying into the up move?
Yeah, I think Bajaj Auto is something interesting because the stock over the last 1 or 2 weeks was going through a very shallow uptrend. The volumes had dipped down. The price action was just about trading above the 50-day moving average, and that too with a very thin margin. I think 2% or 3% broadly was the stock higher than the average, and it was trading in that kind of a trading range. 9,700, 750 was more or less the near-term resistance for the stock. But today's move is a very strong breakout move, and the best part about the move today is that right from the start, when the stock opened with a marginal kind of a uptick mode, when it managed to break past about the 10,000 levels, from there the stock has rallied up another 300 to 400 points, which means that it's a strong price volume breakout mode, as well as a breakout this consolidation the stock was trading in the last 2 weeks. Positive on Bajaj Auto and expecting the stock to now continue to trend up higher. The only change which could probably happen on the positive side could be that the beta could change for the higher side for Bajaj Auto. So we may not see a very, very sluggish kind of a trend, but we may probably see the stock rising up by, say, a margin of 5% to 7% in the next 3 to 5 days.
Right. In fact, since we're on the subject of TVS, let's hear out what the management had to tell us in our interaction with them just yesterday.
We are really looking forward to the festival, because I'm of the view if the current run rate is 13%, festival is going to be much higher in terms of the industry. And we believe in giving better value to the customer. If you look at Jupiter 110 or Ntorq or Zest or Jupiter 125, it is the best in class value addition to the customer. Okay. I think what is more important is we have to give more value to the customer than looking at just mere discounting.
Right, okay, that's the take coming in on TVS. And today, of course, Bajaj Auto is as well giving it a tough fight, about a 4.5% uptick coming in for that stock. In fact, it's one of the top movers. Actually, not just Bajaj Auto, there's Hero MotoCorp as well, which is now holding up a good 1.5%. And even some of the stocks which have gone a little sideways, like an M&M, Tata Motors, they're also participating in trade today. But clearly, IT is not, and you're not seeing much of a move when it comes to banks either. Naresh, how critical is the Nifty bank participation, and when do you see it coming on the charts?
So it's been a long time we've seen outperformance come from the bank Nifty. It's just that the first indications are here in terms of we are not falling anymore in a major way. We are flattening out. So over the next 3 to 6 months, I would expect eventually at some point of time, Bank Nifty takes the leadership. And most of the large cap heavyweight teams have gone through a 3-5 year period of underperformance. So out here, a little bit of a change in sentiment could take it higher. We've seen this happen a couple of years back also in July 22. We saw a rally of almost 30 to 40% on the Bank Nifty out of nowhere. So remain positive on the banks, given the risk reward is very interesting. The top picks continue to be ICICI Bank, SBI, and then watch out for the day Kotak and HDFC turnaround.
We'll have to wait for that day because we have been trying to watch out for that, but it's taken just a bit longer. In fact, Nykaa continues to be in focus with that 8% up move. We will get Snehi shortly to talk to us about what's happening on the business side of things. We do understand that 1.4% equity has changed hands for now. But for the time being, Kunal, what's the view on Nykaa? 8% move today, over 20% move this week. Is it likely to head higher in the coming week as well?
I think this is a very strong move for Nykaa because this has come back into a zone where the stock is confirming a price volume breakout now on the monthly charts. And I think so far on the monthly basis, this is one of the best volumes the stock has shown over the last 14-15 months or so. So that itself indicates that this has been a good change of trend for the stock, which was languishing quite some time. So I think it was trading below the longer term averages, even below the 150 mark for almost 5-6 months or more in 2023 start somewhere. So I think from there on the stock has picked up quite well. Now it's broken past about the 200-220 barrier. So what we could be looking out for is the stock, if it finds more volume or more buyers, say over the next few weeks, more longer term trends could probably emerge on the positive side. The supports now after this kind of up move has risen to the monthly low for the stock, which I think is closer to 175 to 185 levels for Nykaa. So from a long term play, I think traders could look at this kind of a support territory and continue to build on long positions.
In fact, since we're talking about Nykaa, let me also take it across to Snehi, get in more info on the stock and of course the block deal too.
Well, absolutely. Let's take a look at Nykaa and why Nykaa is in focus today on the back of multiple reasons, in fact, and the stock is also holding up pretty smartly as of now. But when you take a look at the marketing spends, it's an interesting trend that we have spotted on this front. Now, Q1 FY25 for Nykaa saw a 60 bips rise in marketing spends, and the management has also said that these marketing expenses will most likely be in the range of 8.5 to 9% going ahead. Marketing and advertising expenses has gradually increased year on year for Nykaa since Q2 FY23. If you take a look at this trend, compare, for example, Q2 FY24 with Q2 FY23, or even the latest Q1 FY25 with Q1 FY24. If you see the trend on a year-on-year basis, you will notice that even on a percentage base as well as on an absolute value, the marketing spend has increased for Nykaa year-on-year. But on the flip side, if you take a look at it seasonally, sequentially, because of seasonality and other factors coming into play, this trend is not spotted. But well, yes, on a year-on-year basis, this trend is very evident to spot. Marketing support revenue also grew 44% year-on-year in Q1, which is a key positive coming in for the company. Quickly taking you through what the company did in Q1, revenue was up 23%, PAT expanded by 2.5 times, EBITDA was up 30% year-on-year as well. Nykaa increased its existing majority stake of 51% in Dotting Key to 90%, and also picked a majority stake in a clean beauty brand, Earth Rhythm. But today Nykaa is in focus on the back of yet another reason, and that is a block deal. We have seen block deals going on Nykaa since morning, and reports suggest that this is businessman Harinder Singh Pal and Singh Banga and his wife Indra Banga. They were likely to sell 1.4% stake in the company worth 809 crores. This is what reports have suggested to us. Remember, Harinder Pal Singh has been an investor in Nykaa even before it hit bosses and held 6.4% equity stake. We'll have more details on this block deal later in the day, but well, yes, this is why Nykaa is in focus.
Okay, thanks so much for those details on Nykaa. Let's do one thing. Let's take a short breather on the show. We'll be right back with more.
Back with closing trades right here on ET now. Extremely listless and very, very quiet, patterns of which you've been reading since Tuesday when the range, at least at an index level, has only gotten narrower by the day. Let's check in on what the global markets as well are up to ahead of the Jackson Hole Symposium. Of course, there is a lot of heightened chatter on what's really going to transpire, whether a September rate cut is inevitable, is there something which is going to be out of policy at the Jackson Hole event or not. For now, the global markets, at least the European markets, are looking pretty okay. You've got across the board gains of about 0.5% to marginally at least higher. Asia, mostly lower because there is a little bit of a nervousness, at least Hong Kong, Kospi, Australia, etc. Even Shanghai was just a smidge in the green. The US futures, though, are a lot better, one would have to say, because the Dow futures are currently scaling higher by over 100 points. And the S&P as well as the Nasdaq futures as well look quite comfortable. So let's take this discussion forward. We've got Arnab Das, global macro strategist, EMEA at Invesco, joining in on the show right now. Arnab, hi, good afternoon. Good to have you on the show right now. Just wanted to understand all the hype and all eyes now on Jackson Hole. What's Powell going to say with regards to US economy, the latest jobs data? Does it seem like a September cut is inevitable, or are there still question marks around it?
I think a September cut is extremely likely. Maybe, never say never, so not quite inevitable. But I think, we've been moving in the direction of September cut for some time. Maybe the market has gotten ahead of itself in terms of the extent of the easing cycle. It had gotten ahead of itself a few times, I would say, in terms of when the easing would start, how deep the cuts would be, how fast and how thick they would come. But now I think we're more or less priced correctly for the very short term. And so I think we are on the cusp of an easing cycle, maybe not a very deep one, because I'm sort of in the camp that we're going to have a bumpy landing, not a full-blown soft landing, but nor are we going to have a hard landing and a severe recession. So we can talk more about that. But I do think, the message that's going to come across generally is data dependence, and yet signaling the start of a rate cutting cycle without strong commitments to the pace and the extent of easing.
Interesting. But Arnab, hi, this is Anish also joining in the conversation. What about the recession fears? Do you think those were overdone when we were all talking about it just a couple of weeks ago?
I think so. Look, I mean, I think, people have been calling for this recession for ages, right? We've been waiting for Godot in terms of the rate cuts and the recession. I think part of the issue here is that many people are still trying to force fit a very unusual downturn and recovery and then disinflation into the normal cyclical template that we've all become used to over a period of decades. But this has been a very different cycle. It's had much more to do with the supply side than most of the cycles in people's living memory, right? And I think, that's still going on, right? A big part of the softening in the labor market that's been taking place is about labor supply. It's about an increase in the labor force participation rate. It's about an increase in immigration. It's about a widening gap between the household survey and the establishment survey, which send very different signals much of the time, but even stronger differences this time around. So, without wanting to be, too much in the camp of this time is different, I think there are important differences that bear, watching and keeping in mind as we look forward to what is clearly a slowdown, but is not yet clearly at all a recession, let alone a hard landing, in my view.
Okay, so not a recession or a hard landing, but what about India? Because that's managed to outperform quite strongly, whether you say in terms of growth. India is one of the fastest growing economies. Stock markets have been close to the record high levels as well. How's the global investor looking at India right now?
Look, I think there's still a good deal of optimism, that despite, many people hoping for a stronger majority for Modi and for the BJP in the election. I think there's still very much the sense that this is a good time, not just this year, but years to come and maybe decades to come for India for various reasons, right? The demographic dividend is still there, although it's not being fully exploited. The election sends a message that job creation and inequality have to be dealt with. Unemployment has to be dealt with. Underemployment has to be dealt with. So there are moves afoot in that direction. I think there's still the possibility very strongly out there that India becomes more of a manufacturing economy. There's no reason why India cannot be, right? Before the British Raj, India was the world's largest manufacturing and trading nation by quite some distance. So it can go back in that direction, but it needs to continue to liberalize, and particularly liberalize the labor market and liberalize the land market. And maybe continue to be somewhat difficult to do, but moves are obviously, as everybody knows better than I do, moves are afoot in that direction at the federal level and at various state levels. So I think the future for India looks brighter than it has been in a long time. I think the only issue for the international investor is how much that is in the price, because equities in India, often tend to have very high valuations, and now they continue to have extremely high valuations. So that is a challenge. But I think many investors are continuing to hold on to India. Flows are continuing to come in, institutional flows. And so I think that's going to continue.
And I also want to talk about, the clear sort of bone of contention from where this global shake-off that we had last time actually started. Japan, that is. And do you expect the issues around yen carry trade to continue, and whether, both growth as well as the interest rate differentials are going to remain this way for the next foreseeable future?
Yeah, look, I think, we had a tantrum in the markets. And I suppose, the tantrum has a few different causes. One is the July non-farm payrolls number in the U.S. was unexpectedly weak, and the market apparently wasn't prepared for that, and it sort of coincided more or less with a more hawkish signal than expected from the BOJ governor Ueda, around the same time a couple of days before, and that I think set off a volatility shock that has kind of shaken out a lot of the carry trades. If you look at the data in the Chicago Mercantile Exchange on net open positions, FX positions in dollar yen, you see that those have come down quite substantially. So right now, it looks like a lot of the speculative part of the carry trade has been unwound. And maybe what remains is some speculative positions. Maybe some of those are being put back in, as well as more fundamentally driven long-term positions by Japanese retail, so-called Mrs. Watanabe, institutional investors in Japan, and corporates, which are investing in higher yielding because higher growing countries, not just because of the higher yield, unlike the speculative investor, who is really betting on currency stability and an interest rate differential, right? That's what's been shocked. Now, I think looking forward, the thing to do is to keep an eye on the situation because the interest rate differential is likely to continue to narrow. In my view, it's going to continue to narrow from both sides, with BOJ gradually, slowly raising rates, and the Fed gradually, slowly cutting rates. Now, if either of those things changes because Japan is reflating faster than expected or the US is slowing down faster than expected. So if I'm wrong and there's a harder landing coming in the US, for example, that might cause another bout of volatility. I think it'll be more limited than the last one because the last one appears to have shaken out a lot of the speculative long dollar, short yen positions, and not just dollar, Mexican peso, Turkish lira, possibly even Indian rupee, right? Apparently the RBI had to intervene or chose to intervene at that time. So I think a lot of that has been shaken out, but a lot of it, some of it may be coming back in, not least because Governor Ueda also indicated that during the shock and the turbulence that the BOJ would not be raising rates if market conditions were extremely volatile, which of course makes sense, but it does create a little bit of moral hazard that encourages speculative shorts in yen and longs in other higher yielding currencies to come back into play. So I would keep an eye on it, but I wouldn't expect another severe bout quite as bad as what we've had before.
Don't expect another bout of yen carry trade getting unwound. And just before we let you go, Arnab, what's the best tactical trade right now globally? Because you have the US dollar, which has slipped almost to that 100 level. You have the crude, which has been very volatile, around $75, $80. Gold continues to spike. US markets are doing well. What within all of this do you think is the best tactical trade right now?
Look, I think all of these things are going to continue to remain in play. I'm not sure I would put on a very strong tactical bet on either of these directions at the current moment, right? Because I think a lot of this is already priced in. So like I said, I'm of the view that there's a 25 basis point cut coming. That's more than priced. There's something like roughly 30, 32 or something basis points, right? So the cut in September is, if most of us who believe that's going to come, 25 basis points are correct, that's already priced in, right? So it's not going to do very much. I think what you have to do is look further out. And there, I think, we're going to have like I said before, a slower, more gradual, more sort of data dependent easing process. I think it's still going to lead to a weaker dollar. A higher gold price is going to continue to contribute to that because rates are coming down, the dollar is softening, and central banks, some central banks, Russia, China in particular, maybe India as well, a few frontline states around the war in Ukraine, given the situation in the Middle East, maybe more gold buying by central banks and also retail and institutional demand piggybacking on that, plus on the softening dollar and the rate cutting cycle. I think, you also have to look out further ahead and obviously think about the American election. We're many of us in the market discussing the Trump trade versus the Kamala trade, or Kamala trade, we might say in India. Look, I think, the Trump trade further out might be lower growth, somewhat higher inflation than otherwise. And the Kamala trade might be, kind of a more reflationary trade, higher growth and somewhat higher inflation. Either way, the Fed would be more likely to be constrained relative to what the market might expect if it were a pure demand-driven cycle with less of a push from potentially fiscal changes or regulatory changes or structural changes driven by the U.S. federal government, right? So a lot to bake in that I think, it's becoming more in the present just because of the time right before the election and the coming change in administration, one way or the other.
Okay, Arnab, so good to have you on the show. Thanks for taking the time out and joining us with your insights on global markets and their movements. In the meantime, let's just take stock of what our markets are up to. Well, at an index level, absolutely nothing. We're just flat as flat can be. So let's get in some closing trades. Or Kunal, is it a difficulty finding out those names?
I think few stocks are still showing signs of a trend. So I would probably pick ICICI Bank at current levels. Now, for the first time in the last, I think, 2-3 weeks, the stock is closing past above its 50-day moving average, as well as a multi-day swing breakout. So ICICI Bank is something which I would probably believe should lead the charge from the private sector banking names.
Okay, ICICI Bank, buy after a while. Naresh, what is it that you've picked out?
So that would be a buy on Bharti Airtel. The stock is say 1.5% away from an all-time high. A classical bullish flag formation here, so could see a breakout going forward in the next couple of sessions.
Okay, a breakout in Bharti is what Naresh is anticipating. We're going to take a very quick break on that note. Come right back. The last half an hour of trade on the other side.
Welcome back. Well, the market is fairly quiet, but within that, there are pockets which are actually doing well or underperforming a bit. In terms of stock-specific action, take a look at Minda Corp. That stock has managed to scale almost 13% as we speak. Welspun India has seen a perk up in the last few minutes. CDSL has been doing quite well, though it's off the highest point of the trading session. Himadri Speciality, Philips Carbon, these are some of the names that we are watching out for. And of course, Nykaa and DOMS are the two other stocks that have been doing quite well. Important flashes at the bottom of your screen, wherein Goldman Sachs has actually cut India's full year calendar year 24 real GDP growth forecast by 20 basis points. They're expecting the growth to be sub 7% right now. They have an estimate of 6.7%. And even if you look at the full year calendar year 2025 real GDP growth, they have cut it by 20 basis points to 6.4%. And that really merits the question if there is any sort of slowdown that perhaps we should start factoring in. And that's what we're going to put across to Siddharth Kemka as well. He's the head of retail research at Motilal Oswal. Hi Siddharth, good to be speaking with you. Well, while we have been talking about 8% plus kind of growth, there have been questions raised about the sustainability of that, and we have seen an earnings season as well. After those series of upgrades this time around, there was a bit of a plateauing, and perhaps in some respects downgrades were more than upgrades. Do you think there is a bit of a slowdown that we should expect in India growth rate and earnings as well?
Yeah, hi Anisha. Good afternoon. Good to be on the show. So if you look at the expectation from Q1 was a bit tepid, and what we have seen that overall earnings for the quarter has been in line with our expectation. And the major part of this tepid growth was on back of a very high base. And for the full year, we continue to expect a modest growth in that sense, about 12 to 14% earnings growth for the full year. That looks modest because of the high base of the previous two financial years, FY24 we had a 22% kind of earnings growth. FY23 we had almost 36% kind of Nifty earnings growth. So on back of two high growth base year, we are expecting a 12 to 14% earnings for this year, and then further FY26 the growth should stabilize around that 15-16 mark. So I believe the earnings growth cycle will continue. Yes, there are some, you can say, roadblocks in terms of the commodity prices going up and demand cycle for especially some of the larger sectors, for example, banks, where we are seeing slowdown in, especially in the deposits, kind of tapering the growth, which was a sector which was doing the heavy batting for the earnings growth. Nonetheless, if you look at the management commentaries, a lot of positive commentaries coming on, especially if you look at the growth in the rural versus urban, and the commentary suggests that rural is picking up. A lot of sectors are dependent on the rural sector, and with the monsoon season this year being good and the upcoming festive season, we believe that could lead to a big demand for a whole host of sectors, including the consumers, the durables, the automobiles, the agri-related sectors, and that should kind of drive the earnings growth for the remaining part of the year.
Since we're on the subject of banks and figuring out the prospects of them going forward, we spoke with Rajiv Batra from JP Morgan earlier today, and he believes that, once the sectoral churn plays out, banks will make a comeback, and a steady one at that. Also believes that it may make sense to actually ease off or profit take from some of the select premiumization trend names and put that money into FMCG with a rural play.
So far, the narrative has been let's chase the accelerating and the higher growth rather than a sustainable growth. Now, bank sits in a bucket which has a very sustainable bottom line growth and also trading at a cheap valuation. So once people are done chasing laggards like IT, FMCGs, and maybe some of the insurance name, maybe then they will come down to the private banks. Hence, we still keep our faith in this space and we are still keeping an overweight call on financial as well as bank. Looking at the current earning season, people have awarded that sort of a companies or sectors who have given a very strong top line or who have maintained their margins as such, because bottom line this quarter has been a problem due to extraordinary factors like election, extreme summer, higher base effect, and demand fluctuation. So taking that into account, earnings are still clearly missing either in IT space or even in FMCG space. I'm not saying there's not a hope, but if I compare between the two sectors like IT and FMCG, IT still had an headwind of uncertainty in the US, and especially around whether they can maintain their GDP growth or they will slip into the recession. With this uncertainty in mind, we are still not mincing our word and sitting with an underweight on IT. But in case of an FMCG, there's a hope that has come in form of a recovery in the rural side, looking at monsoon, looking at upcoming festive season, inflation has been contained, and most importantly, the peripheral jobs coming up for the rural India in the Indian development or real estate or infrastructure space, which can help them beyond the farming season.
Okay, that's some color on where banks as well as FMCG may be actually headed, and what is it that you should be doing with the premiumization theme if you still are continuing to hold those stocks. But Siddharth, any new ideas that you may be working with?
Yeah, so if you look at some of the broader market, that has been doing well. And from that space, we like some of the key themes. For example, EMS is a theme that we have been consistently liking. Recently, we initiated coverage on Dixon Technologies. It has emerged as a fast-growing, diversified player in the EMS space. Plus, it is one of the key beneficiary of the PLI schemes for some of the electronics like mobile phones, IT hardware, white goods, lighting, and even AC components. So very strong growth expected, revenue CAGR of 44%, PAT CAGR in excess of 50%. And we believe that with higher asset turnover ratios, that should result in a strong return ratios of 33-36%. So that's a theme from the EMS that we like. In the real estate space, a new stock that we have liking is the Suntech Reality. The company is present in the micro markets, plus it has a luxury offering, proven execution track record. We are seeing a lot of traction in the urban luxury projects with for Suntech. The bookings have been in excess of 1.1 billion in Q1. And that is almost 22% of the overall pre-sales. So the company has improved its financials with a strong balance sheet. Cash flows have improved, and expecting a 30% growth in bookings for the current year, and overall around similar growth in pre-sales. So Suntech from the real estate space we like, with a target price of 745.
Coming in as far as some of these segments are concerned. Just wanted to also talk about the Nifty Indices Committee meeting, which is expected to happen later today, and there's expected to be some sort of rejig in the Nifty 50 list, and those graphics will come up for you on the screen shortly. The expectation is that Trent is likely to be included in Nifty 50, and it too can be the case with Bharat Electronics as well. The inflow could be to the tune of almost $500 million to $440 million. And on the exclusion side, you have LTI Mindtree and Divi's Lab that might get kicked out, and that would result in outflows of around $200 to $250 million. Changes are expected in Nifty Bank as well. Inclusion is expected of Canara Bank, $40 million inflow is expected, and Bandhan Bank might get kicked out, and that's why there are expected to be some outflows on that. Kunal, comment on the likes of Trent as well as Bharat Electronics, because these are the likely candidates to get into Nifty 50. How would the overall chart picture look like on these two?
Yeah, I think Bharat Electronics is interesting. Even Trent, of course, has done phenomenally well over the last 1 to 2 years, and I think this year also the stock has done exceptionally well. It touched the 7,000 mark also, I think intraday or yesterday, and is now scaled down a little bit. But I would probably believe that both these charts are looking interesting. Bharat Electronics could be more interesting because the stock has gone through a patch of consolidation. 300, 305 broadly has been the pivot range for Bharat Electronics. The stock has just about managed to swing 5-10 points from this pivot range for itself over the last 2-3 months. So my expectation is that closer to this pivot range, 300 to 305, could be a very good territory where one could look to buy. And we've also seen Trent also doing pretty well. So in case if the stock dips down to say 6,400, 6,450 mark, that could be a point where one may look to go for a contra buy.
Right, okay, that's the take coming in on some of those buzzers which are likely Nifty contenders. In the meantime, right now, of course, is Bajaj Auto. It's spiked up almost about 5% as we speak right now. Coal India, Bharti, ICICI Bank definitely is making a decent move. Kunal had just recommended that as a buy as well just a short while back. M&M, Tata Motors, or you've got a Bajaj Finserv, Unilever, Hero MotoCorp. These are all buzzers in trade. But IT, of course, as a sector continues to lag. Siddharth, do you believe that IT will take some time for a meaningful recovery or sustained recovery, I should say?
Yeah, so I think the results for the quarter had been better than expectation, but the expectation by themselves were a bit weak. And what we are seeing is a mild recovery in the discretionary spending, especially among the BFSI clients. And nonetheless, there is an overall pressure on the discretionary spends that continues. And that should, I think, keep the pressure on IT stocks, at least in the near term, at least till the time there is clarity in terms of growth coming back and recoveries witnessing in some of the key markets. In that sense, if you look at some of the larger and diversified players, the likes of TCS, we believe are much better placed in this environment, given the large order book, diversified order book, and the leadership, which helps them navigate in these turbulent times. Some of the niche players, I think, would be under pressure. For example, a TechM, where telecom spends impacting them much larger. HCL Tech is another interesting name where they are more focused on cloud and some of the digital space where the spending has been resilient. So in the large cap, we like TCS and HCL Tech.
That's the word coming in on the technology names. Naresh, what's your call on Nifty IT?
So the structure is positive. We finally crossed the 2-year highs. It becomes a buy on dips rather than chase the momentum. And in that sector, the names which look interesting is HCL Tech, which has been coming back towards the previous all-time highs. TCS has been the leader in terms of the large cap IT space. So that also is a buy on dips. And apart from that, the smaller names like Birla Soft, etc., which have corrected and have made a new base, look very interesting. So it's a whole basket approach, but a buy on dips rather than chasing.
That's the approach that you need to follow for some of these IT names. In terms of the other big movers right now, there is Minder Corporation, the one that is perking up. Philips Carbon has had a great week and a great few weeks actually. Some of these RPSG group companies have been doing quite well. On the losing side, you do have names like Birla Corp, which are actually down. KPR Mills is coming under pressure, and TVS Motors is too cooling off a bit, and Macrotech Developers is that. Siddharth, what's the view on real estate now? Because today, of course, in the morning, there was a Citi note which upgraded the target price across the board on all the companies. But there are these, ground checks that tell you that perhaps the inventories are piling up and sales are not as fast as they used to be 6 months ago.
Yeah, Anisha, I think yes, there is definitely when you are sitting at record order books and the pre-sales has been at record, so there will be some fatigue that will set in, and the long-awaited rate cut cycle is yet to begin. So what we have seen so far is a very strong growth in some of the luxury and the upper segments, but in the mid segment, the growth will come back once we start seeing some rate cut cycle happening. But if you see the overall growth story continues to be pretty strong. Uh, uh, we are expecting double-digit growth over our coverage universe. New launches pipeline has been pretty selective by the large players, and that keeps the supply, you can say, in a controlled way. That kind of only comes in when the demand is there. So the overall view is that we remain positive on real estate for FY25, a double-digit growth rate. We continue to see re-rating potential in some of the stocks on back of strong pre-booking sales and cash flows. So we like Sobha Developers, Godrej Properties, and Suntech, which are among our preferred picks within the real estate space.
Okay, let's get in some BTST ideas as well. On that note, Naresh, anything that's looking interesting on the charts?
So two large cap names which are nearing a new 52-week high, all-time high, showing relative strength. First is a bond Bharti Airtel, just a percentage point away. Stop loss at 1490, target price of 1550. Second is Hindustan Unilever, stop loss at 2790, target price of 2860.
Okay, that's a buy on both Bharti as well as Unilever coming in as BTST ideas from Naresh. Kunal, what about you?
So I'll go with Taban Motherson, Samvadna Motherson. That's a chart which is coming back into a breakout mode after that 1 month back of correction from 200 to 175, 180. So would suggest a buy with a target of 205, stop loss at 193. And Coal India is a buy. The stock is inching towards a fresh breakout, a multi-week breakout. So targets of 560, stop loss at 530.
Okay, bunch of buy calls coming in there from both of our chartists. In the meantime, let's just take stock of what's under pressure today. We've been flagging off as to how it is IT, which has definitely not gone down well. But look at Deepak Nitrite, IGL, for instance. In fact, this was a laggard yesterday too. M&M Finance, Chambal Fertilizers, IEX. These are some of the names which continue to weigh in heavy on the markets. Realty as well for the week. The index itself has seen a downtick of about almost 2%, and a Macrotech, Prestige have been the ones which have dragged most right now. Siddharth, I mean, we've all seen how realty as a story has actually panned out. But do you think corrections like these, or dips like these, I should say, should be used as buying opportunities? Or would you sense that the sector may go into some sort of consolidation for a while?
No, definitely. I think some of these corrections should be used as an entry opportunity. This is a market where the Nifty, or you can say the larger, broader indices, are in a sideways mode. And on a regular basis, we are seeing sectoral rotation happening. So the core investment thesis for the real estate space continues to be positive, and we believe there will be some profit booking led corrections in some of these sectors which have done well. So investors who are looking at entering in this space, the correction or the dips would be a good entry opportunity.
Point taken. So that's a view on some of these stocks right now. But what else is happening in the market? Well, apart from the fact that Bajaj Auto is doing quite well, there are not many other big buzzers. In fact, what's your take on autos and especially two-wheelers at that? I mean, there's no special news flow today on Bajaj Auto, Siddharth. There might be a, some 3 to 5% kind of upgrade that has come in from JP Morgan. But actually, TVS Motors got an upgrade from JP Morgan. UBS increased their target price as well. That stock is quiet, but Bajaj Auto is firing away. They also got recently some PLI approvals. Would you be a buyer on Bajaj Auto at current levels?
So Anisha, yes, a lot of news flows in the two-wheeler space. The entry of or the listing of Ola Electric has only added a lot of, you can say, fire to the space. The way it ran up, the stock ran up after the listing. If you look at some of the data points that came out, some of the legacy businesses, for example, Bajaj Auto, TVS Motors, they have started gaining market share or regaining market share in the two-wheeler EV space. That is a positive for some of these older companies. Plus, the PLI scheme is a big positive for Bajaj Auto. I would say that a lot of their products getting approval incentivized from the PLI scheme, that is also positive. And within the overall two-wheeler space, we believe that EV penetration would be much better and faster. And within the 3-4 players that are there, TVS looks to be a better poised with a better share among TVS, Bajaj, and Hero. Within the three, I think TVS has the larger share in the EV two-wheeler space, and that makes it a preferred play compared to others. But I think overall, with the good monsoon and the upcoming festive season, the entire two-wheeler space should do well. Our preferred picks would be a TVS Motors and a Hero Motocar.
Okay, bunch of ideas coming your way over there. In the meantime, let's just take stock of what else has happened this week. And you clearly had FMCG managed to advance for a third consecutive week. In fact, name like Varun Beverages, Radico Khaitan, they managed to lead out quite nicely. Pharma also hit a record high. Glenmark, Natco Pharma, they were the ones which were the leaders of the pack. Autos also led by TVS Motors and SAMIL, a stock that Kunal just flagged off. They held out very nicely as well. And some of the smaller banks are the ones which managed to lead. In fact, the Nifty Bank has managed to showcase an uptick for a second consecutive week. Names like Bandhan Bank, IDFC First, they all managed to hold out pretty smartly in trade. In fact, just 3 minutes left to go. We'll thank Siddharth, Kunal as well as Naresh too for joining in. Let me hand it over to Snehi and find out how the week went by was and of course how the day as well has panned out.
Well, absolutely, Aisha. If you take a look at the intraday trading session today, absolutely lackluster coming in for the Nifty. Nifty 0.1% higher. Sensex also in tandem. Not much happening. Rather range-bound trading session coming in for us. But if you take a look at the broader markets, you had the broader markets were bucking. Were below the benchmark indices as well today. Nifty mid-cap leading the losses with 0.5% cut. Small cap not losing as much as the mid-cap, but well, yes, in the red nonetheless. Absolutely flat on the small cap as well. If you take a look at the advanced decline ratio, quite balanced, but well, yes, slightly tilting towards the declines today, and that's how the market breadth has looked today. If you take a look at the sectoral gainers and losers today, Nifty Auto has done pretty well for itself today. Bajaj Auto, TVS Motors, Tata Motors, Motherson, M&M, Hero Moto, Bosch, Maruti, all of these stocks have ended the day in the green, and Bajaj Auto, in fact, a 5% uptick coming in on that stock, and that has what has fueled the Nifty Auto pack today. On the flip side, however, you had Nifty Realty. That was your top gainer in today's trade, and that was led on the downside by Lodha Macrotech. That stock was roughly about 5% lower in today's trade. Nifty Media also 1.5% lower. Nifty IT, Nifty PSU, Bank, Metal, FMCG, Pharma, all of these counters have ended the day in the red. Let's take a look at some of the big winners and losers in today's trade. First of all, let's talk about some big news makers. You had SEPC, that was a buzz in today's trading session, as high as 19% at one point in the trading day on the back of receiving the final assurance certificate. You also had Reliance Infra on the flip side. That was losing away in today's trading session because Anil Ambani has been banned from SEBI by participating in the markets for 5 years and also from holding any key managerial position in the company. So Reliance Infra, well, yes, almost 11% lower is where that stock has ended. On the back of block deals today, we saw a bunch of block deals coming in. Ambuja Cements, 31 block deals coming in. Nykaa also, you saw a big block taking place today. Tata Technologies had 10 million shares change hands in a single trade. So all of these stocks were abuzz on the back of block deals. Nykaa 8% gain almost coming in, so very good move. Tata Tech also in the positive and 3% higher on the back of these block deals. BKG Foods was in focus. They're all set to acquire 55% stake in Ariba Foods. So BKG Food was also another stock to watch out for today. Other than this, you had Bharat Forge that was in focus. Power Mech Projects has been abuzz since the get-go. Railtel, Zomato, both of these stocks were also in focus today. On the back of some brokerage growths coming in, then Go Digital Insurance was one counter to watch out for. Jefferies have initiated a buy rating on that stock and a target price of 550. It's also Citi's preferred pick with a target price of 425 coming in. We also had some commentary coming in from the management analyst meet coming in as well. So 2% higher is where Go Digit has managed to end the day. Also, you had TVS Motor in focus. UBS has maintained a buy but has hiked the target price to 3,200 from 3,000 rupees earlier. So, Tata Motors, also TVS Motor, pardon me, in focus. 2% higher is where that stock has ended the day. Quick list of other top gainers. You had Minda Corp, PCBL, Himadri, CDSL, LG Equipments, DOMS, Realtel, all of these stocks in the green, anywhere between 6 and 19%. And on the flip side, big losers today: Macrotech, Deepak Nitrite, Prince Pipes, GE Shipping, Baroque Engineering, as well as Prestige Estates. All of these stocks lagging anywhere between 4 and 5.5%. But that's how we sum up today's trading day. Nifty 50 at 24,833.7. That's how we end today's trading day and also close the week.